Okay, hi everyone. Welcome to this new episode of our podcast series into innovation ecosystems unpacked. And today we're talking about access to capital and what would we need for access to capital? Why is it important? Are we having enough of access to capital here in the Netherlands? And today we are discussing also the easiness of accessibility of that part. And I have two great guests here today. Rinke Zonneveld, Director of InnovationQuarter, one of the regional development companies in the Netherlands, of South Holland. And Gianluca Valentini, who is VP Marketplace Operations at HousingAnywhere, but also has a long history in terms of funding and also part of a EQT Ventures as venture advisor. So today we will talking about the access to capital. Rinke, can I start with you? Can you tell us how did you end up here?
How did I end up here? In my current role as the Director of InnovationQuarter? Or?
Maybe when you were 17 and studying.
Okay, maybe that's a good starting point. I was 18 and I went to Amsterdam to study. And I studied with management. Bedrijfskundige economie in Dutch. Because I was 18 and I wanted to have a fast car, a fast job, a fast wife. And I want to become a manager. I still don't know what it is. I'm one, but I still don't know what it is. And somewhere along my studies, I went to a lecture by Mohamed Yunus, and he was the founder of the Grameen Bank, and later on he became Nobel Prize winner because he's the founder of microcredit schemes worldwide. And then I decided, and of course not because of this lecture, but because of everything I was not really satisfied by my study. It was not really fair because I never went to university, so you can't complain about your study. But anyway, so I decided to switch to development economics. And in development economics, entrepreneurship was something that was very deep into the core of this study, because entrepreneurship is what you do to make a living. Yeah. While I was studying bedrijfskundige economie, management studies, entrepreneurship wasn't mentioned once because everybody wanted to work for a corporate. And this was in the beginning of the 90s. And what we've seen afterwards is that more and more of the youngest and brightest students want to become an entrepreneur. And here, Erasmus Center for Entrepreneurship is a very good example of that. Entrepreneurship is since then one of the key elements in my career. Later on I became Director of Industry and later on Director of Entrepreneurship within the Ministry of Economic Affairs. And one of the many roles and responsibilities I had was that I was responsible for all the regional development agencies in the Netherlands as a shareholder. Yeah. And then it was back in 2012 that a lot of the municipalities, the province, the universities here in this part of the Netherlands decided we also want to set up a regional development agency. And I was asked to participate in these discussions as a future shareholder. And somehow I winked twice with my eyes and I ended up becoming the executive director.
Yeah. So what is interesting is that I think that South Holland is one of the last provinces with a regional development company.
No, that's not the total story. You used to have, in what we call here in the Randstad, the province, you used to have a regional development agency for decades. So, and there were four big ones, the Bom in Brabant, Oostenrijk, Liof and Non. We were the first one in the western part of the Netherlands. But later on, one was established in the Utrecht region. Yep. And now this year, there will become one in the Greater Amsterdam region. So we were the first new kid on the block. Yeah. At the moment, I'm the director with the longest track record. So day one, you're the new kid on the block, and by far the youngest. And now 7 years later, you're the oldest. Not in age, but in experience. So quite a lot has happened in the last 7 years.
And maybe also good, like what did the role change of a regional development company when you started in 2014 and where you are right now? And maybe also explain a little bit what the role was then and what it is right now.
We are a company.
Yeah.
We are privately organized, but we have public shareholders.
Yeah.
So, and our main aim is to strengthen the economic structure within the region. We do so by mainly 3 tasks. One is we're responsible for attracting foreign companies to the region, but also more and more helping our SMEs on foreign markets to do their business over there. Second is what we call our innovation task or our business development task. That's strengthening ecosystems and clusters by running large innovation programs, setting up open innovation facilities like field labs, helping with campus development, building consortia of companies who want to work together, but not what is not regular businesses, so that's either cross-sectoral or working on innovations where there's not a clear business model yet.
Yep.
And the third part is we are an investor.
Yep.
Currently we have 4 investment funds for slightly over 250 million euros. We are one of the 1, 2, 3 top investors in the Netherlands in a number of deals. And what has changed over the years is that first we were a startup. I started on my own. And now we are 100 plus people.
Yeah,
we started with a small investment fund of only 28 million. Currently we have 4 investment funds with 250 million, and probably by the end of the year it will be somewhere around 320 and 340 million. So a lot has changed, especially in my role. First I was the founder, the entrepreneur, not the entrepreneur that I was the risk. It was not my own money, but it was my own reputation.
But you run it as a company, yeah.
I run it as a company as much as possible in the setting we have. So my role has changed drastically from, in the beginning I knew everything. And now sometimes I hear more from talking to people outside of InnovationQuarter, what's going on within our organization, what we're doing for great stuff, than I hear within my organization. Yeah. So,
Nice.
Yeah.
Gianluca, going to you. Also, maybe the question, how did you end up here?
Well, I think I'm an example, one of those entrepreneurs that saw the beginning of the EC, so the beginning of the startup scene in the Netherlands, especially in Rotterdam. And I also remember when InnovationQuarter first started. I think with my company at the time, we were tenant number 2 or 3 in the campus. So I saw my office just now, former office. So I came here to study initially from Italy. And then I started a company basically even before graduating with my roommate at the time. And the reason why I did that is because deep inside I always knew I was going to be an entrepreneur. I come from a family of entrepreneurs. And I just knew I have this passion for building companies, building realities, and walking into an office where you see people that are there, that you're doing things together that you created. So I did that for 4 years and a half, up to 2017, when I exited that company. And at that point, I started to think, okay, what is next for me? What do I like? And I realized that I like both the operator role as a founder, as a tech operator, but also as an investor. But I also realized that investing is something that takes experience, and I didn't have any. And it also is not something that I want to do full time. It's something that I think is going to be more in my later stage of life. So I decided to do 2 things. On one hand, I wanted to be helping entrepreneurs like me to raise capital, because I realized that capital is available. There's a lot of capital, and I think today is even more than just 3-4 years ago. But there was a lack of, if you want, knowledge on how to do that. So I became a fundraising advisor, and HousingAnywhere was my first client at the time. I know the original founder, Niels.
Yep.
And that led to a 9.5 million raise at the time. And next to that, I started to do angel investment on my own initially, and then I was joined by other angels, and we created what today is called Great Stuff Ventures. It's an angel syndicate, and the vision that we have is, talent can come in many forms and shapes, or from anywhere. Often it just lacks knowledge or network. So we wanted to be that first bridge to access that. So that's why we say we like to invest in great people doing great stuff.
Cool. Yeah.
And also on the other side, I think the way the traditional VC model works is not really, let's say, approachable by all kind of upper class individuals. So I think there was a component about making more accessible to them as an asset class to invest, because it's an asset class that is high risk, but it doesn't have to be necessarily.
No.
If there was more liquidity, it wouldn't be as risky. So that's why Great Stuff Ventures came to be today 10 members, and we did over 12, close to 14 investments actually.
Yeah.
And we already made one exit, which was a bit of a lucky shot, but happy about them. And next to that, I also became an advisor to EQT Ventures, which is another thing. So they are part of the EQT group, which is a large private equity investment or asset manager group from Sweden. They're stock listed, and they have many, many different funds, from infrastructure to the most recent being the ventures one, which was co-founded by Kees Kolen from Booking.com. So there was a Dutch connection.
Yep.
And through that, I was really captivated by the vision about being an operator or operating VC, and also their approach to data. So I just reached out, and they decided to work with me on an advisory role to find great people. And my vision for that was there are many scale-ups here in the Netherlands that could make the next step, and it would be great to put them on the map, even more than they are already. So that's a bit, I like to help in bridging the two sides of the table, and it's an ongoing process. I'm still in the middle of it. And to conclude, today my role is pretty much an operator at HousingAnywhere, where I focus on fundraising, but mainly the data part, revenue generation, and acquisitions. Yeah,
nice. And just to, and also please, if there are questions, please ask them, because it's of course an open conversation. So, of course, right, access to capital is an important aspect of an innovation ecosystem, also to let companies grow. How would you describe, I would say, the current situation in the Netherlands? So, are we doing a good job or not? Maybe also from the experience that you got from the companies that you are guiding or where you are part of. And also maybe a second question would be, do you think that is it different for a startup or for a scale-up?
It's massively different, clearly. The truth is, and this is something that I learned after my previous experience as a founder, as a very young founder, because I was 23. I used to be more of the thesis that we lack great investors, but I learned that actually it's not that. It's not lack of capital, because there is a lot of capital.
Okay, nice. Yeah.
And what I saw is that great founders find capital, and they usually find even more than what they need. Yeah. So there's like an information asymmetry that I realized firsthand. So for instance, in the Netherlands with EQT, when there are some companies that can raise 5 to 10, 20 million, usually they find their way to even to EQT, even without me, can be the case. So those kind of exceptional companies or really good opportunities that are out there, I think there are a lot of opportunities, a lot of businesses that could be that great, but maybe they just lack the knowledge on how to fine-tune. It can be the presentation skills, can be their communication style, can be their thinking, the strategic thinking. So in that sense, I think there is on the entrepreneur side, there could be more help, or maybe more education on how to think great. Yeah. Because in the end, VCs have a certain kind of expectations, and they're not just giving you money to make twice the money. They have very, very high expectations. So you need to know the game you're playing. Yeah. And it's not for everybody, but if that's what you want to do, that's what you need to learn, or the way you need to think. And for the investor side, what I saw is that, especially on the angel level, network plays a huge role for both parties, the entrepreneurs and the investors. What I'm lacking, and what I'm trying to change in my little contribution, is sharing deals more actively and combining forces and points of view to get a company funded, instead of thinking about maximizing your own allocation on the cap table in the deals that you find.
Yeah.
I think there is more value in sharing, especially as angel investors, and sharing knowledge, deal flow, and people, than trying to secure those few deals that you find and try to maximize on them.
Yeah.
So I think this is my experience so far.
Nice. Rinke, how is it from your side? Because you are also at the table as a
in general,
investor.
I agree with what Gianluca is saying about there is enough capital.
Yeah.
But what you see, and that holds true especially for soft tech companies and software as a service companies, etc. But what you see is all this capital is looking for the best risk-return ratios.
Yeah.
And for example, if you have high risk, really deep tech proposition with a and also high capital intensity, it's rather hard to find money, especially in the early stages. And a lot of times that's where we come in, because we look at these propositions through a different lens, I guess. So in general, there is enough money.
Yep.
And yes, if you're a really, really good founder, even in very difficult propositions like I was telling you about, you might find the right investors. But for a lot of companies, and a lot of times these are the kind of innovations that have the highest societal value, it's hard to find capital, especially early stage, high risk, high capital intensity. It's still hard to find capital.
And how do you look different at those companies?
What we do, and I think the investment game we play is from a lot of perspectives even a nicer game to play, because we look, yes, of course, we have to make a financial return, but we also look at what's really the contribution of this company, of this innovation, and not contribution to our balance sheet, but societal contribution. Does this company solve a big problem in life sciences, sustainability, in high tech, and does this company also strengthen our ecosystems? We have here, and so we always take a double-folded approach. Yes, of course, good financial return, but also what's the real contribution of this company? And so we will never invest in the next boat sharing app or something like that. We invest in deep tech, in clean tech, in life sciences, in cybersecurity, in AI, in quantum, and the real fun stuff.
Yeah, but and if you look at that particular part, do you also, for example, come across companies that are maybe right in the league? What Gianluca explained about that they maybe will find investment. Is that also something that you would step into because they are, or is it? Because I can imagine it's a battle between return on investment on the one hand, because you have revolving funds, etc., and on the other hand, the societal part. But you're still an investor,
the official answer is if there's no market failure, we won't invest. That's the official answer. But of course, there's a huge gray area. We always invest from 3 of our 4 funds with private co-investors. So if there is in this investment consortium no place for us, there's no place for us. Doesn't mean that we're always a follow-on investor. A lot of times we are a lead investor, and we look for the right private investors to join us. But the official answer is if there's no market failure, there's no place for us. But of course, we're not, as they call in Dutch, gekke Henkie. We were, for example, the very first investor in a company that's called Cybersprint, a cybersecurity company. And the moment we stepped in, the only one who believed in the company was an angel investor. And later on, EQT Ventures joined us, Vortex Capital Partners joined us, and we stay on board because we're now in the position that maybe we're going to make a good return in time. So. But for example, a lot of these software tech propositions that for them it's not that hard to raise capital. What's our contribution? And what we also have to look from a different angle is really what is our contribution? Because money alone, the great Dutch philosopher Johan Cruyff once stated, a bag of money doesn't score a goal. So what's our real contribution? Is it only providing some capital, or can we add something to the company, to its future growth? Yeah. And that's a question we have to ask ourselves, but it's also a question each and every venture that's doing fundraising has to ask about their investor.
Yeah. Nice. Maybe a nice intervention also in the series is that a question from someone also from the field. This relates, of course, to this topic. So, a question especially to Rinke, but I think it's also nice for Gianluca to respond later to it. It's from Machteld Groothuis.
Hi Rinke, this is Machteld Groothuis from Rubio Impact Ventures. As a fund investing in Dutch impact-driven entrepreneurs, we like to work together with the regional investment funds. And I wanted to ask you, for IQ, what is your ideal co-investment partner and why?
For me, an ideal investment partner, the ideal combination for me is one, an investor on board that has a real strategic angle. So, for example, a corporate venturing partner that really knows the technology in the market and has international market access. Two, a more entrepreneurial investor, for example, an angel fund, or an angel informal investor with rather deep pockets. I think one of the worst things you can encounter is an angel investor that steps in, gets its share, and then it's placed on the table, but once it gets tough, doesn't have anything to add. So the combination of a strategic investor, an entrepreneurial investor, and ourselves.
Okay. Yeah. Nice. Gianluca, if you, maybe same question to you, but also in relation to what Rinke told a little bit about the role of a regional development company investment. How would you describe what are potential nice partners to invest with from your experience?
Well, if I speak personally as Great Stuff Ventures, so with our angel syndicate, we're a rather small investor, and we like to say that we help mainly with network. So one of our propositions is we're a small investor, but if you're missing capital, we're going to find it. And that's one of the things that I spend particularly a good amount of time on, getting to know other investors and also knowing who are the partners that are nice to work with, right? Who can, they just don't have a fund, but they also know, how to deal with, situations that can be thorny, how to deal with, when things don't go as well or as your nice projections showed. But also who can help with more access to capital. So well networked and well known in the industry. I think there are quite a few examples of investors that maybe are more of a narrow focus on their own operations and they don't spend as much time on it. And those might be in those seats at the table that at a certain point you feel, you might even have a big stake, but your value add has ended. So we try to look for that as co-angel investors, let's say, or even with early stage VCs. In the case of EQT Ventures, is very different. They have the full fledged of services in-house. They have the venture funds, which is over 600 million, 650, I think, the second one. Now they have a growth fund, which can do, I think, from 50 million plus. And that is also in quite a big fund. It's not yet announced, but they deploy good quantity of capital. And they also spend a lot of time in assisting operationally, so recruiting, so finding talent, finding executives, connecting you. They also have a presence in the US, so they often help you to bridge the gap. And they have the whole private equity M&A expertise in-house. So in that sense, they have an approach where we do everything in-house because we can. When you are just a VC firm, then my suggestion would be get to know the people and see them as business partners, not as competitors for allocation.
Because is this also maybe now the discussion a little bit open towards the future? Because that's, I think, interesting. So where should, I would say, the capital landscape be developing towards, right? So you're saying like investors are taking on a different role, so they're also more in the supporting phase of things. Why do you think that they are doing that? And maybe also the question is that a good thing, or do you should remain just investor and then maybe other people supporting? Or is it because there's a lack somewhere? What is there? Maybe Rinke, you can...
Well, there are a couple of things I'm seeing and a couple of things I'm hoping. One of the things that I see currently is that the professionalization of informal investment.
Mm-hmm.
You know, back in the old days, an angel investor was a guy in the 60s who sold his SME company and thought, okay, next to playing golf 3 times a week, I'm going to invest small tickets in startups. Nowadays, what you see is a lot of serial entrepreneurs or entrepreneurs who sold a company in their late 30s, early 40s, or even younger, who start investing. And they bring a totally different experience to the table because they're still entrepreneurs. And they are still very well connected into the world of our innovation ecosystem. But what we also see is much larger tickets by informal investors. We have angel investors as co-investors who bring, without blinking their eyes, 1 million euros on the table. And back in the old days, it was 40K. And so that's a totally different ballgame.
But do you think this helps to?
Of course it helps.
And why is that?
Because it brings not only money back into the ecosystem, but it brings also a lot of experience back into the ecosystem. So this whole giving back mentality is speeding up, and the more we see that companies are being sold and a lot of these entrepreneurs earn a lot of money, the more of this money will flow into the ecosystem, in our ecosystem. So that's one. 2, and that's more something I hope for, is what you see a lot of Dutch startups, and maybe the real good ones that have this problem less, is that they're hopping from milestone to milestone, from investment round to investment round. And what I hope for is that we see more investors who have the guts to bring serious money in an early stage on the table and to give these companies time and trust to build their company. And time doesn't mean sit back and relax. No. It's still, but a lot of startups, they're hopping from milestone to milestone and from investment round to investment round. And that takes away a lot of energy, a lot of focus from what
they should be doing. All right. So my next question would be, if you look at it from the investor side, so more question to you, Rinke, like public versus private, right? So is that something? Is that a good relationship? Does it work well for you?
Well, maybe more from a national perspective.
Sure.
The amount of public money in VC is huge. We are involved, the regional development agencies are involved with more than 50% of all VC deals on a yearly basis. But a lot of private investors in the Netherlands also get a big chunk of their money from public sector. Either via the Seeds Capital Scheme, DVI, European Investment Fund. We do fund investments ourselves, municipalities, etc., etc. So I think the division between public funds and private funds is not as big as people might think. You know, my investment managers, they have a background with INCAF, with SET, with Prime Ventures, etc. So there's more private experience and private mentality within public funds, and there's more public money within private funds. But I think we should have a discussion about how we get more private money within VC, because I think there is the balance between public money and private money is not the right balance.
So
and it's a European problem.
Yeah, I just wanted to say, like, is this different than the US or
It's different than US. It's different than Israel. Well, maybe Israel. There's also a lot of public money involved. This is different, but it's without a doubt different with the US. It's also quite different with the UK.
Yeah.
But it is a European problem.
Yeah. Okay.
But it's better than no public money with the current stage of where we are with our startup ecosystem than no public money.
No, I understand. Yeah. So Gianluca, is this different? Is this for you something where you say, well, I also experienced that because of public money, things are different in a positive or negative way, or?
I think it helps. It helps to just have more capital available to entrepreneurs. Sometimes I question how the allocation is done, but it's not a segment that I know very well, that I work with regularly, other than in the case of, I think, the Corona loans that were handed out during the pandemic. I thought there was an example when there is urgency, when there is real need, how basically a country or like a set of institutions can really work with each other to help businesses. And I think I've seen several countries how they responded to that. And I thought the Netherlands was a very very, very positive outcome, and probably one of the best in Europe in that from helping businesses. In HousingAnywhere also, because of that, we were able to not lay anybody off, which I think is something that a lot of scale-ups in, I don't know, even just the UK can't say. So.
Yeah, and I think that is also, for example, what we see in the research, right? So, like the NOW-regeling, they look at previous years, but especially for scale-up, that's a problem, right? Because previous years your numbers were lower, so the effect is less than that. Rinke, you set up also this Corona loan or bridging loan. So, what was your experience like giving it out? What was the response back from companies? In terms of how did it
whether they got money or not. A lot of them were extremely grateful. Because for a lot of companies it was do or die. Probably HousingAnywhere would have survived, but they would be thrown back in time, 2 or 3 years. But for a lot of companies it was do or die getting this Corona bridge loan. And as you might know, I was the initial initiator nationwide. I designed the Corona Bridge Loan Scheme for a large part. And it had to do with, back in 2008, 2009, I was responsible for the crisis response team within the Ministry of Economic Affairs. So I noticed what was going on in the market. And I also noted that once this set of measures was being announced by the national government, that they wouldn't help that much for enough of companies, for startup scale-ups and enough of SMEs. So that's why I took the initiative to come up with the Corona Bridge Loan. Of course, it asked tremendous lot of our organizations. Back last year, we provided 160 ventures with a Corona Bridge Loan. A loan for this region. And next to our portfolio of almost 100 companies we have to take care of, next to the 30 investments we did last year. So I asked probably too much of my people last year. And the responsibility weighted also very heavily on their shoulders, because it was do or die for a lot of companies.
Exactly, because you also see from a research perspective, like during crisis times, right? Then the interesting investments come up, right? Or you can make interesting investments. Is that also something that you saw, Gianluca, like last year?
Oh yeah, totally. Wealth inequality is really visible in a certain environment, and you really see how. When like an economic or macroeconomic shock like that happened, the people were suffering, or they were somehow getting out of difficult situations. They were thrown back into it, and those people actually had some capital already. They took advantage to make smart investments. I think in the case of real estate, we see a lot of real estate buy to lend kind of players that took advantage of that, and instead of seeing prices going down, prices in real estate remain at the same level. Why is that? Well, because those who actually had money, they saw an opportunity to buy cheaper, and those who didn't, or they were building up their little wealth, they took a step back.
Yeah.
And that's really unfortunate. So, but I saw a lot of deals coming, like a lot of firms that did same terms around as the previous years, and they also look for, other capital sources. So, as an angel investor, we got a lot of deal flow, which we would consider as outside of our range. But yeah, I was there for the takings.
Yeah,
Nice.
I think in general last year you saw 3 different responses from investment funds. One, investors who felt responsible and who acted responsible. Who said, okay, this is a crisis. We know this is going to be a fee crisis in some form. And we're there for the companies we already invested in, but we also feel responsible for the ecosystem. So we're here. We were there in good times, we're here in bad times as well. Then the second was, and especially in the first 2 quarters of the year, you saw that response quite often is wait and see. We're going to focus on our current portfolio. We're not going to do any new investments because there's too much risk in the market. And the third response was, and maybe that also consists of 2 parts, who thought, okay, this is very interesting time to do new investments. And some of them, they would try to enforce deals that were maybe not that fair for the ventures.
For the ventures,
So that was the bad part, but there were also some who really showed an entrepreneurial approach as investment funds. Okay, if one half of the investment funds is leaning back, we're stepping in. So there is no bigger picture. There were totally different approach by different funds.
Nice. So what is also nice is to discuss a little bit also with the question that we got from an entrepreneur about maybe it's best to just to show the question, otherwise I will tell the question before we go.
And in the time we were looking at opening our first pre-seed round, we noticed that funds, angels in the Netherlands have a very big appetite for B2B startups rather than consumer focused. Of course, you can always find that niche as well. But what are really the drivers, according to you, that have led the years for the Dutch market to be so B2B driven? And do you see any new trends on the topic and type of business models? And how do they actually differentiate in the pre-seed versus seed stage? And of course, what is your personal view in this perspective?
So the question was there are typically more investments in B2B instead of B2C. I think it's more like an open question on the table, like, do we see the same thing, or is it in particular markets, or are these investors, let's say, not part, or we don't have contact with them, or how is a little bit your view on that?
Yeah, I can answer. So I know Iris talked to her and her team, and she's an exceptional founder, and she has a very strong team around her, and they are indeed more B2C. And I agree with her that B2C or even just direct to consumer is a bit more challenging to raise capital, especially in Europe. Personally, I'm a big fan of consumer products and consumer startups. Like, I have a very big appetite, but it takes a bit of guts. It's a little bit less predictable. It can go very well, it can go very bad and very quickly. So I guess it's not for everybody. But I think it's changing. I think I see more and more consumer startups that are popping up and they're receiving capital. So I think that the trend is in favor. We had a big swing of the pendulum toward B2B. Now I think it's swinging back. There are many examples of that. I think, especially in retail distribution of FMCGs. Yeah. I think that's one of the markets that I've been observing for quite some time, and now it's Picnic was one of the examples, but there are other initiatives that are coming into the lands from Germany.
But Picnic is not a fast-moving consumer goods company; it's a tech company, of course.
Yeah, true. But they brought that innovation to that field, which is the real that basic consumer needs, and there will be more like that. So.
Yeah, we hardly invest in B2C companies.
But do you think it's a problem?
A recent investment we made was in Peter Pot. Of course, that's also more or less a B2C company, but we hardly invest in B2C. And we don't invest in fast-moving consumer goods. That's not the name of the game we're in. Is that a problem? Well, there are specialized funds in fast-moving consumer goods, and they help you build a brand, etc. But it takes another kind of investor than we are, and a lot of funds are. Yeah.
But and do you think from your opinion, like in the Netherlands, because the remark was made like, hey, there's maybe less access to, I don't know if there is capital, but less access to B2C investors? Or is it a difficult question in terms of
as investors, because I am not per se an expert. So sometimes it takes me longer than somebody that maybe has built a company B2C to understand the business opportunity. And some investor might just be like, it's not for me.
Yeah. Nice. So during the break, we discussed also a little bit about investor partners, right? So who are you going to partner up with in terms of an investment, and also the experience in that? Because partnering up really opens up, more opportunities for companies to grow, to invest in, but also, it can sort of have an issue in terms of collaboration. What Gianluca, what did you experience with working together with different investors, and also what could, I would say, go wrong or...
What I've mentioned earlier is that you still have a heritage of when it comes to venture capital firms, a heritage that's more leaning toward the finance part. So there's still firms that don't have operators in their teams, or people that come from creating startups or businesses, but more from can be investment banking. And the way to think about the business is more of a Excel spreadsheet to some extent. So it can be that when it comes to difficult situations, a lot about being a good investor is about asking the right questions. At least that's what I try to focus on. When I'm advising a founder, I don't know the answer for them. I can only try to make them think by asking smart questions. And sometimes, if you haven't been in the shoes of founders, it can be also personal level, right? Like the self-doubt about being a founder. That's something that if you haven't been there, you don't know how to identify with. And I think that if you have only done investment banking or investments, unless you have like a track record, 20, 30 years in with working with founders, you might like that insight that doesn't help the founders in the end.
Okay. Rinke, I was at a little bit question as before, but...
I think both startups as well as investors should be more picky about which investors they want to work with. Should spend more time on, is this a true match, not only for the good times, but also for the bad times. A lot of times we've done over 150 deals, and I think somewhere in the upcoming 1 or 2 months we're going to announce our 100th portfolio company. So we probably worked with 200, 250, maybe 300 different co-investors. And with some you have a really good match. And a really good match doesn't only mean that you can trust each other, that you can work perfectly fine with each other, but also that that you bring another experience to the table. But I think for a lot of startups, they're so happy that they find an investor, that they don't spend enough time in, is this fund, at what stage is this fund? Is it a closed-end fund which is already invested for 7 years and you're the last investment of this fund?
True.
That is not the best investor, most probably, because that means that they're going to work to an exit within 3 or 4 years' time. So pay more attention to which investor you want to bring on board and where you're at.
Because you're also working with IQ towards investor readiness types of programs, but also investment readiness, or let's say to make the investors, especially the angel investors, more ready to work in it. Do you think this is also, I would say, the solution in terms of what you can do, or do we need to also structurally change something in this area?
We don't run investor readiness programs. I think that's for the angels themselves to organize them in any way. We're going to scale up an investment readiness program. We already did some pilots with it. It's being developed by our colleagues from the BOM. And because a lot of these companies, they don't know what an investor asks from them. And, it's an uneven game sometimes. So you should help them prepare themselves better. And that's also good for us as an investor.
And that is also a little bit what you relate to, like that you teach them, like listen, think about what the investor, at what stage they are, etc. Right? Because that is where maybe the most.
Sometimes a company decides not to accept us as an investor, and if they do that for a good reason, I think that's a very wise decision.
Gianluca?
I agree. I think it comes down to understanding how VC structures, LP, GPs relationship work, and also their incentives. So that's also part, that I've been there, where like, we get the money, happy days, but it's just the beginning of the story, and there is much more at play. And I've seen some initiatives of kind of fund, intermediaries that instead of advising companies on, or say funds on how to find companies, but rather they advise strong founders on who are the good investors out there. I've seen a couple of initiatives, but it's becoming more of a topic where you can choose as a founder, and you should be choosing.
Yeah. Nice. So maybe also as a question, maybe last question. So what is both your advices on how companies or ventures could best use the ecosystem, especially of course access to capital? So what would you advise them? But what are things that you say? Well, try to use the ecosystem in this manner.
Usually, it's about first of all being a great individual yourself, and I think that's a process that you can do for being a founder, but just for being alive in this sense. So the more you invest in yourself and educating yourself, the more you're going to be able to have interesting and interesting conversations with other people in the ecosystem that can point you at other people, right? So usually good people or great people know great people. If you enter in that circle, you're going to be accepted as a peer, and then it becomes much easier. So that's why I stress a lot on talking to as many people as you can, but also cherry picking those you follow up with. Trying to have quality conversations, try to learn, listen a lot, and never take it personal in that sense. So it's always like, even when it might feel like a failure, turn it into, okay, that was just a learning. And it's a process. You're chasing something that you'll never reach, but the process of chasing is what is worth it. If you do that, it's not difficult to enter the network, and it's just a matter of time before you can raise capital, before your company can accelerate.
Nice.
Yeah, well, I think my answer is similar. Connect and engage, but also be picky. There are a lot of startup events where most of the people present are lifestyle entrepreneurs or would-be entrepreneurs. If you're a serious entrepreneur, go there once, but don't go there twice once you've noticed that. Ask a lot, learn a lot, give back a lot, but also if you ask an investor or you ask someone like me a serious question, 9 of 10 times you get a serious answer. But don't waste the time of serious people with unserious questions because you want to make a conversation. But if someone sends me a WhatsApp this afternoon, Rinke, we're facing this problem, can I have your advice? We can call tomorrow. Tomorrow is Saturday. We can call tomorrow without any problem. But if you send me a message, blah, 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 can we have a cup of coffee together? Why should I drink a cup of coffee with thousands of people?
You don't have time for that.
No.
I don't have time for that.
All right, I think that's a nice closing. Okay, maybe last question, because we always ask this, right? So, any last thought or something that you would like to share, or maybe say, okay, yeah, maybe we didn't touch upon this on the podcast. Of course, we can talk for hours, I think, about this, but still.
I always like to say, I think you mentioned that, right? So. It's always good to think what you can give, what you can contribute, right? So you can only be part of an ecosystem only if you can give something.
Yeah.
As much as that something might be very little at the beginning, but that's fine. As long as you're willing to give, then you're going to receive. That's kind of my principle.
Yeah. Amen.
Okay. Well, then we're going to finish off here. Thank you very much, both of you, Gianluca, Rinke. I'm especially looking forward to what is going to happen the next, I think, upcoming years for... maybe last question. Where is IQ? Yeah, sorry, I forgot this. Where do you think IQ is in the upcoming 5 years, I would say? What is your role? What is...
That's a very difficult question because as an investor, I could answer it, but our responsibilities have mushroomed over the last 7 years, and we should keep a focus on where our biggest added value is. So that's a discussion we're in the midst of. As an investor, I hope we will be there where we're most needed. So early stage, high risk, deep tech, capital intensive, and patient capital for energy transition.
Nice. I think this is pretty concrete already.
Yeah.
Gianluca, where are you? Where you company in 5 years? You hope to be?
Still as an operator and as an investor on the side.
Yeah.
And my vision for that is to make angel investing more democratic for more people.
Nice.
And more collaborative.
Nice.
So that's really what motivates me.
Cool. All right. Thanks again. And hope to see you soon.
Thank you.